Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Hey, Bruce.
I love that entry, man. That is,
Yeah, it's fantastic, man. Give you a little bit of energy in the morning, right?
yep. Happy Monday morning. I appreciate you getting together with me. We got a lot of important things to talk about. Tom McNamara, EXP Realty, top producing agent, wonderful agent, takes great care of his client. Working with one of my clients, got him an amazing home, negotiated a great deal. Thank you for that. I appreciate you. He's very happy. Let's talk a little bit about the market. So, Tom, you wanted to discuss doctor loans or
I do,
physician
yeah.
loans,
Right. Physician loans, yeah.
right? Jumbo loans. And then the third thing you want to cover is the market.
The market. Why it's always a good time to buy.
All right, let's knock it out. All right.
Yeah, absolutely.
So,
So Bruce, I keep hearing about doctor loans, right? So tell me a little bit about them. Like, what does it mean and who's it for and how does it work?
so oftentimes people that are physicians will be interested in getting a type of loan that they may not otherwise qualified for. For instance, a typical doctor loan works best when the doctor or soon to be a doctor coming out of fellowship or internship wants to be a doctor. They're loaded down with student loans, and Fannie Mae and Freddie Mac are going to count all those student loans, and they're not making enough money, and they want to put minimum down. So a doctor loan really gives a doctor an advantage to be able to enter into the market with a little lower down payment. Typically, those loans are adjustable rate mortgages. They don't have to be, but there is a little bit more flexibility and forgiveness when it comes to student loans and future employment. Because let's just face it, they just got through spending 15 years in school, 18, 20 years in school, and now they're hitting the ground running with $500,000 or more in student loans. So it gives them an advantage to do that. We have a variety of programs to assist physicians. Some will qualify, others won't. Some of these programs do not accept like chiropractors as being a physician, and others do. So they are special, but we have a variety of programs that we can help
Bruce,
people that
are these conventional loans or government backed loan?
They're actually neither. A true traditional doctor loan is a portfolio loan, meaning it is going to be held, funded, underwritten under the guidelines of the institution or investor that came up with the program. And since CrossCountry is a direct lender, we have all those programs available for our physicians.
Got you. So it's not a government backed thing, because a lot of people would say, hey,
Not a
that might be
VA
unfair,
loan.
right?
Now, if you are a physician and you're a veteran, there may be some ways we can look at alternatives. Oftentimes I'll get a call about a doctor loan and I'm like, they don't need a doctor loan. They need a regular conventional loan, and a conventional loan may work better for them. So everybody is on their own merit. Next, we wanted to talk about jumbo loans. We've mentioned that in this conversation.
We have, yeah.
What is it? What do you think when we hear jumbo? What does that mean to you, Tom?
I know there's a specific number that it means, but I see it as a big loan, right? With for a large house or a high dollar house, right?
Yep.
And
just by virtue of the name, right?
Just by virtue of the name, right? Makes sense.
The other name that lenders call it is non-conforming, but non-conforming can be a very broad definition. That could mean a non-qualifying condo or something that doesn't conform to Fannie Mae, Freddie Mac, or HUD. So jumbo loans are also portfolio type loan. They're not backed by the federal government. They're not a Govy loan. They're not a Fannie Freddie loan. They exceed the limit. So they've exceeded the loan limit of $726,200, which now makes it a jumbo loan. Again, CrossCountry, we underwrite, fund, and even service most of those loans. And those criteria can be a little bit more strict when it comes to cash reserves, a debt to income ratio. But oftentimes, Tom, believe it or not, I mean, we're even seeing interest rates that are even slightly better than a conforming loan might be at any given time. So
Now,
those are
why would that
loans.
be? I don't why would it be a better interest rate if
Well,
they're
when I
borrowing more?
say that, I say sometimes we see
Yeah,
that. Like right now, that happens to be the trend. Well, you have to remember that banks want high net worth people, right? I mean, they're trying to attract high net worth people. They want you to put your money in their bank.
sure.
So they will make that type of transaction a little bit more attractive to solicit you for other bank products. So
Got you.
they'll dangle a little carrot out there, sweeten it up with some honey, and make it just a little bit better. So they're like, oh, I got my loan and I did it through CrossCountry, and I see it's being serviced by XYZ Bank I've never even heard of, but that was the bank that wanted to fund the jumbo loan. So now again, we have all our hedge funds to be able to fund and even service those loans, but that's typically what people see. It does not conform to Fannie Mae. It's not insurable by Fannie Mae or
Right.
Freddie Mac. So loan that exceeds 726. So, but let me tell you something, how you could even avoid a jumbo, even though we're talking about jumbo. Do you know, Tom, you could buy a home right now for $749,000, just under 750, $750,000, and put 3% down, three, and avoid jumbo for a 726 loan. I mean, who could have thought you could have put 3% down and bought a $750,000 house? There's no country on the planet other than the great country of the United States of America that even has anything close to that program. And that's
You
what we've
know,
got here.
that's a really good point, and I do I do talk to a lot of people international, right? People outside of this country, and the majority of countries that have a mortgage system for people to buy houses, majority of them, it's all adjustable rate mortgage,
Oh,
and
yeah. And you have to remortgage every 5 years. They
yeah,
don't
yeah,
call it
yeah,
refinancing. They don't
exactly.
necessarily have to requalify, but they'll give you a 5% 5 year fixed, but then in 5 years comes back, it might be 7.5, right?
Exactly, and then you
So,
can't afford the house, and then you gotta move out. So, yeah, I love the way it's not perfect. We don't have a perfect system, but it's pretty darn good.
well,
So,
30-year
hey,
fixed rate is about as good as you're going to get, right?
absolutely,
Yeah.
absolutely. So listen, Bruce, we want to talk about why it's a good time to buy really in any market. And I get a lot of pushback from people about, oh, I'm going to wait for the market to crash, or I'm going to wait for rates to improve, and I'm going to wait for this, and I'm going to wait for that. And I've only been doing this 8 years. I've talked to people that have been waiting for 8 years, and I'm like, man, you missed out on some of the biggest and best benefits, and you're continuing to miss out because you didn't
I
move when
see
you
it
should have.
every day. And you know what? We have to understand that people have fear, they have reluctance, they're trying to protect their asset, they don't want to make a bad decision. But I will tell you, waiting to buy real estate is almost never a good idea. It's tantamount to saying, I'm going to time a stock and wait for it to hit its bottom. You
Right.
can't do that. It's not possible. Not even the professionals on Wall Street get that right every day. And they're the best of the best of the best. So, it's funny because I think maybe a lot of people out there think that it's just a traditional sales presentation that you should always buy now. You should always buy now. I can look at the history of my entire life from the day I was born to today. And there may have been a short window that was in 2006 to 2008 that might not have been a great time to buy. Maybe 2005 to 2007, that short window. But that's because the whole mortgage industry put the country into a collapse. Right now, we are seeing the buying opportunity. And you think about it, Tom, most people did not buy after the recession of 2008, right? They didn't
Right.
really get into the market till 2015, 2017.
Yep.
But who would have made the most money? Do you think you would have made just a crud load of money if you would have bought in 2008 through 15? I mean,
Absolutely.
houses were on sale like they are right now, and yet people were reluctant. So it's that reluctance, just like Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. It is
Yep.
time to be greedy. Get in there and get your piece of the pie.
Absolutely. And I got to tell you, I know we usually talk about the market and what's going on in the market. And, from the sales side, right? And again, this is all completely anecdotal with a little bit of data behind it, but I am seeing the market already come back. Now it's the spring market. We traditionally head into a better market during spring, but a friend of mine told me yesterday that she did an open house over the weekend, and she had 80 people come through, and she's already got multiple offers. That sounds like 2021, right?
Boy,
And it was a nice house. It was it was correctly priced, right? But it wasn't a bargain, and it wasn't like some spectacular head to see kind. It was a regular old house in a regular old neighborhood at the right price. 80 people came through,
I
multiple
can tell.
offers.
I can tell the people that are watching this right now. And if you're a real estate agent, you can share this. Okay. We want to educate realtors and clients alike. This is look at we want to help clients. That's what Tom and I are in the business for. But we also want to make sure that you, our realtor friends and partners out there, are loaded with the right information. And I will tell you something, the people that are waiting for rates to drop are only going to be the same people that are going to pay more for the house. And the house
Absolutely.
price will have a greater impact on your payment than the rate. And heck, the rate you can refinance it anyway. We're going to refinance everybody at some point within the next 18 months. So, having said that, buy as many properties as you can, sell as few properties as you can. You will retire with so much money. You don't have to be a property manager. Tom can take care of all that for you. Look at, if you want, we can even show you how to be a property manager to manage your own portfolio. Oh, and Tom, you and I are going to be teaching one of our leapfrog classes in April. So we'd like you guys to stay tuned. Watch our website. We'll send out notifications. So if you are truly interested in becoming an investor and learning how to do it the easiest possible way, we're going to share the tricks of the trade with you. You're going to want to sign up for that as well. Now,
Bruce, what's awesome about that program is that it's being an investor without really like focusing your entire life around being an investor. Like I focus a lot of my life around being an investor, but this is for regular old people that just want to, buy one house, buy a couple houses, grow a portfolio over time while they continue to work their regular job and, and do those kind of things, right? And create a supplemental income, heading into retirement and those kind of things, right?
and Tom, are we inviting real estate agents and the general public to this?
We are. We're going to do real estate agents, general public, really anybody that, that wants to come. We can fit about 40, 45 people in the room. So
we'll get it up on the website. You'll need to register in advance so that we know if you're a real estate agent and you're bringing 5 people in. We just want to know how much room we have to accommodate. Now, do you want to talk a little bit about what happened in the market last week?
Yeah. So, over the last couple months, we've actually seen inventory rise, right? Every week, every 2 weeks, I look at the numbers and there's more and more months or weeks of inventory on the market. This week, that has flipped. Now, it's not a lot, but it's flipped, right? We put in the area that I focus on, we put about 1,300 houses pending, about 1,300 houses closed, but only 950 came on the market. So inventory in that area was reduced by about 400, 500 houses, right? And that was just in a week.
Next week, when we do this, I'm going to give you some numbers that will blow you away. Tom, I am so grateful for you. You are such a blessing to our industry. You do so much for our people. You're so open about educating even your competition. I'm blessed to be in business with you. Thank you for that.
All right, Bruce, you have a great day, have a great week, and don't forget to like and subscribe.